Hi, welcome to MarQetFlow. I'm going to do a quick analysis on the market, and I'm going to share with you a few of the stocks that I'm currently following right now. Like the video, subscribe. Let's go ahead and start real quick here with Bitcoin. We talked over the weekend that we were in this range right here, and we're about to do another leg lower. So that happened. 31 was going to be the first level of resistance, so that didn't hold. It quickly went all the way to 29, which is the next level that I was expecting Bitcoin to bounce. I know there was a lot of fear on Bitcoin. I have a position on RIOT, and I'm still holding my position. I'm going to show you how I'm trading RIOT right now and what I'm seeing currently on Bitcoin. So currently right now, it looks like we say before, there's this positive divergence right here. I can see it bouncing. However, it is not very safe right now. As long as it stays within this channel to the downside, it is still bearish. If I go look at it in the 1 hour time frame, you can see this positive momentum right here on the RSI. It was oversold. They had a positive momentum, but it's still in this downtrend right here. As long as it stays within this downtrend, I think it's still a little bit bearish. So it can probably come back all the way to 31, maybe to 30, and then maybe make people think that it's going to sell pretty hard, and then it's probably going to bounce from there. That's what I see right now. But if 29 doesn't hold, then the next level that I have is 23, and then from there maybe 20, 18. Those are the next Fibonacci extensions that I have. So that is it, and then this is how I'm trading it right now. Momentum is still pretty good. It's positive momentum. I don't like when the price action gets out of the trending channel right here. So what I did, knowing that it bounced, and this can be considered a dead cat bounce, to avoid any losses or maybe a large gap down and then me not being able to take my profits, this is what I did at the close. I sold half of my shares. I sold cover calls, and then I collected the premium. I sold $32 cover calls for next week, and then I bought, with that money, I bought $30 puts. Well, right now I make money both ways, because I have half of my shares I sold cover calls, and then half of them are still open for upside gains. However, both of them, because the price of the cover calls allow me to buy 2 times $30 puts, so I have 2 times the amount of puts, and then I have cover calls. So those puts are going to protect me if the price goes and closes below $30. So if it closes below $30 by expiration, I'm going to get paid $30 for my shares. It can probably sell off, or it can probably bounce back, but just in my experience, I don't like trading outside of the bull trend right now. So that's just the way I traded it. And let's go ahead and look at the SPY right now. Let's go ahead and look at futures. Over the weekend, we had this correction right here, and I was expecting it to sell off a little bit more. However, it bounced right away, and the reason why I started thinking that it bounced right away and why we sold off on Friday, it was because of Friday expiration options. So there is a theory about max paying expiration options, and I use this website. There's many websites to calculate that, but if I type here SPY, last Friday when I was looking here at the max paying level for SPY for last Friday, it's not gonna come up anymore, but it was 410, somewhere in that range. My thought was that that was too low and perhaps that wasn't gonna happen, but it did. It gapped down and then it met the max paying that for expiration date. So I mean, this is a theory. If you're not familiar with it, this is a theory where market makers buy and sell shares in order to collect the maximum premium for the options that they're selling. And then the reason why they made it bounce is because they sold a lot of these shares, and there were a lot of put options bought at this level when the market was selling. There was a lot of panic, so they, to collect again all the premium back, they're probably going to keep it about 420 by the end of the week. So this is, if things stay the way they are right now, max pain by the end of the week should be 420, giving you a target of 420 by the end of the year, by the end of the week, plus minus a point or two. Yeah, I mean, things can change on the market. If I look, so right now the pattern that is developing in the lower level, it's a inverse head and shoulder. This is a bullish pattern right here. So I think that if we break this shoulder line, we're gonna see another leg higher happening. So far right now, this looks like a dead cat bounce, and based on the max pain for the market for option expiration, it should end somewhere around here for 20. We'll see what happens. A few things that make me think that things are going to be very bullish is when I look at Nasdaq. So right now the tech sector looks very, very bullish right here. As you can see, it's still following this uptrend. So it's still bullish following this uptrend channel, and today it break out. We have to see a confirmation of that, making sure that it's still making higher highs. However, the other side looks a little bit overbought, so I'm not exactly sure if it's going to continue. Last time it had a breakout like right here. I was kind of like a fake breakout, and then it did this double top, and then it sold off. It made a correction. So one pattern that may be giving us a clue is if we trace a line from here to here, somewhere like down there. Again, it's not perfect, but this can be the pattern that we may be seeing right now, somewhere like that. So if this is the case, a rising wedge right here, I mean, that could be in play still. So if it gets rejected from here, from this level, and it doesn't make any more higher highs from here, I think that this pattern can be in place as long as it stays in this channel right here. I think things are gonna be bullish, especially if I look at Apple. You can see this right here. Though I was expecting it to break to the downside, and if that was the case, then it would go all the way to 96. I didn't have any positions for that. I was waiting for the signal. However, it broke to the upside, and the target now should be around 160. This is definitely going to move the market. If Apples are moving higher, it's going to move the market quite a bit, and it's very possible that there's going to be another leg on the Nasdaq and then another leg on the SPY. If I look at the unusual option activities, there is big bets for 140, 140, 155. You see that right there? All of them for the next month. So my thought is, I mean, if this is smart money, all the way to the next month, so that will be somewhere down here. That will coincide maybe with this with the earnings. So this may be an earnings run right here. It kind of makes sense now that I'm looking at it. Earnings run all the way to August, and then that will be a pretty violent move, because there's probably a lot of shorts right now on the tech sector. People were thinking the market's overbought, there needs to be a correction. there's probably a lot of people shorting the market. There's probably going to be a leg higher right here, very violent. And if I look at Microsoft to get another idea, Microsoft is breaking out again. I had a target of 163. That's where I closed my position right here, 160. I'm not in it, but as long as it stays on the channel right here, same with Apple, it's bullish. NVDA is the same thing. So these are stocks that can drive the market. It found support right here at 712, so it did have a continuation of this of this retracement, and then today it closed at 755. It looks very overbought. This is not a position I will follow right now, but I think this is my thoughts for the market so far. If I look at the seasonal chart right now for the SPY, normally in June, mid-June, right here it looks like there's a correction. You see that? So that's part of the expectations for some traders. This is normally what would happen. And then at the beginning of July, it's a very positive month, and then once it reached the end of July, either goes flat or either goes down. So once July finish, like buying calls short term is probably not the best idea based on the seasonality chart. If we look at the QQ again for June, normally there's a correction right here, and I think there's probably a lot of traders that were betting on this correction right here, and it hasn't happened. So we get to see if it happens coming up soon, and if it does, that's what the expectation is. And then again, July, very positive month right here. If there is a lot of traders bearish on the market, then that is going to cause sort of a short squeeze for the market. So I think those are my thoughts right now. Let's go ahead and review the rates right now. So as you can see, it's all going in this downtrend channel. I thought we did a ABC correction, and that kind of still holds right here. There's a strong support, and it hasn't closed below that part right there. He bounced from here. So as long as we stayed below the 50 moving average, once it closed above this level, the 50 moving average, I think we're gonna see pain in the market. But so far it can consolidate, it can trade sideways here for some time and do nothing, and then maybe the market is gonna gain another momentum, another leg higher. So those are my thoughts for the market. Last one I wanted to share, it's CLOV and why it's worthwhile talking about it right now. So today it closed the gap a couple days ago, and it continued to sell even the day before. If I go back here, and I'm going to share with you how I traded it and why I'm still holding shares. So this is the wedge right here, and I was following it. This is where it closed the gap, and I didn't want to go long after it closed the gap. I wanted it to see a signal of a reversal, and we got that today. So today it got outside of this, and this is how I traded it. So I got the distance from the top to the bottom. I put it here where it got out of the wedge right here. As soon as I noticed that this was possibly the target, 1380, this is how I do it. So I didn't have a resistance right here, but as soon as I knew that this was going to be perhaps the target, I found the resistance level right here, and then as soon as it got to this level in the morning, I started selling cover calls, and then I bought them back. This is for expiration for the next week as well, and you can see big volume right here, and next 2 weeks, and then this one is for the end of the week too, for 13. So this 13, 14 and $15 calls, large volume by the end of the week. Price target got rich right here. It has to get above 1380, close above 1380 to get to the next price target, which is going to be 16. So that's there, it should be right here. So that's it. This is all I wanted to share with you. Like the video, subscribe. Thank you for watching. Have a good day.
There wasn't a lot of room left on the
PE of 20
side.
is at the top of how high it should ever be.
Right. It's been over there only a few times ever over 20. And that's when usually inflation's about 0. In the early 60s, when inflation was about 0, we got a little bit over 20. Now we have a very low inflation rate. So if you usually have subtracted inflation from 20, you've had the PE of the market. That's been a pretty good ratio. When inflation was 12%, you remember in the early 80s, we had an 8 or 9 PE of the market.